What's going on, Maddie? Welcome in. Actually, expand this. There we go. Perfect. What are futures doing right now? I think they look horrible. Wouldn't doubt that they do. Yep. Yes, they do. What's going on, El Lobo? Welcome in. Welcome in. Doing good, Maddie. Today was definitely a brutal day to watch. I think everyone that woke up this morning was not. I mean, obviously, we knew the market was going to be a little bearish, but I don't think anyone expected it to that extent. The intraday bounce was pretty very minimal today. So it was not what anyone really wanted to see. But I think for the most part, myself and the entire live team, we tried to prepare everyone for this in terms of, expecting some bad price action. I know that even Avery went bearish, in which he's usually always trying to look for, you know, the upside, in which we've been used to the market just being a buy the dip opportunity. And even Avery has actually noticed the bearish trend right now, per se, into what would be our bear market here right now. But those of you that just walked in, welcome in, welcome in. We'll cover the alerts real quick, but hopefully most of you actually stay cash tonight. I think my biggest message for the past few days has really just been keeping the position size pretty light. As you see, this is not normal, you know, market sentiment right now that you want to be a part of, in which you're not going to end up getting into a position and expecting, greater than 50% gains unless you're really getting in and swinging to the downside. Right now, this is more so scalping, day trading for that matter, in which you're pretty much just shorting the bounces. So hopefully, most of you are either in a small size position or you're cash overnight. But nonetheless, let me get into the alerts real quick for today. I'll cover maybe two or three tickers, and then we'll probably call it a night here. But first one that actually caught my attention, and I don't know if I mentioned it on live or not, but it was Under Armour's alert that came out today, in which I saw the expiration. I just didn't catch it at the moment, I think. They bought February 18th calls on Under Armour. And when I actually saw the chart, I was like, wow, the chart looks pretty nice. As you see, it has a nice little megaphone action. Your downside is maybe about so a dollar down to support of the megaphone. But what was actually noticeable is that this expiration actually covers the earnings on February 11th. So this is either a bet that this is going to be a run up into the earnings, or it's a direct bet towards the earnings itself. So that's something that you always want to be pretty much cautious about. I know that uh, pretty much coming soon here, TFC is actually going to be, we're going to either try to avoid those alerts that have earnings in it or give you a heads up for that. So that's something that's in the progress right now. But key factor is that this expiration does cover earnings, so you do want to be aware that those of you that are maybe swinging this position, it does seem like maybe it's a low risk position. Granted, the fact that it's only a $16 share, so that is something just back in your mind. Always be aware when you see far expiration on the alerts. Be aware that it may end up covering earnings before you just jump into that alert. So, but I do like this one here. I like the potential for earnings run up per se. That's what I would hope ends up happening here. But it's a little too early to tell. Market conditions are not ideal. So this is one where I would save the alert and maybe come back to it once you see the market starting to reverse to the upside. And that's what I usually like to do, is that when I see the unusual calls that have far expiration, I'll usually make a note. I'll make a separate watch list, and I'll actually put it on a separate list, so that way once I know that the market's trending in the direction of that alert, I'll look to see how it reacts, and more than not, it ends up being a day trade. So that's just a friendly reminder and advice for you guys. Next one was Airbnb. I wasn't, I was scratching my head just a little bit, but obviously it goes with the market trend. Once I saw this one, so I didn't mind it too much. The other thing is that they gave themselves quite a bit of time, and let me just see if I can expand it so you can get a clean look at this. But they did go pretty much out of the money. They gave themselves a little bit more time here on the to the end of the month, and then they just drop almost about 180K in premium. So I liked it overall. I actually wrote about dash puts on the newsletter. So this maybe coincides with Dash in terms of the downtrend. As we see, it is a clear defined downtrend. There's nothing here that says any kind of reversal at the moment on a larger scale of the daily here. So that's why I just want to give you a big picture, defined downtrend. We'll see if there's any continued movement to the downside tomorrow. Likely take out the wick low here below 152, and we'll see some more clear downside. And this may end up having the opportunity to go in the money. So that's definitely one to keep an eye on. But if you actually notice, you did have an opportunity to make money off of it today. They triggered this at 157.78. It already closed at 154. So about a $3 move to the downside. You had an opportunity today to make a nice quick move out of it. But likely I expect a little more continuation of this one. So do keep this one on your watch tomorrow. Maybe add it to your watch list, and we'll see what she does there tomorrow. All right. Another one was Goldman Sachs, and I know that Tom was pretty much all over Goldman Sachs for the past few days. He was in there for the run up, uh, because we know that banks have been doing well the past few days, more so last week before the earnings, and then it just decided to wet the bed pretty much. We saw that $30 move to the downside, and this pretty much inclined that there was going to be about another $10 move once I saw it. So they ended up triggering it at 350. We saw a little bit of a bounce. They filled the daily candle here about halfway from the lows. So we'll look to see if there's any continuation to the downside. But right now, this is currently in a losing position right now. So that's what we'll be watching for. The other thing that's really noticeable is that they gave themselves quite a bit of time, about a month out in expiration. So it looks like they're looking more of a broader market sell off here, in which case this is really going to end up working in the favor of the banks just decline, continuing to decline basically. And as you also see, I do have the little megaphone action here. We broke that support pretty cleanly, gapping down, and we're pretty much making a new low here. If I was to look at the chart, just eyeballing here, is that you're likely going to end up reaching a low right around here, in which you're coming down to about 342ish. That's what would be my anticipation. There's no noticeable gap just near term that stands out. The only other gap, if we end up breaking below 342 and we continue to nosedive, would be this gap that's right down here below 278, which that would be a heavy drop. So, I mean, right now 342 would be my overall target on that. They hit 325, and those 325s, yes, that's pretty deep. But yeah, that would put you 325s would, wow, that would literally put you pretty steep. You see? Yeah, that would put you right down to the bottom here. If you're actually looking at this chart with me here, 325. Yeah, that's a pretty steep drop. So I can see it end up happening. I mean, we ended up having this gap fill here prior, but it looks like it was already filled. That could be something in which, if the market does collapse, we see this spy below 450 here. That's really going to end up starting to force the selling pressure to continue. And I would see this end up happening. But again, this is one where you either you took a position on the bounce, or you want to continue to see it in the coming days here and keep it on your watch list, just like you would keep Airbnb. So those are two that I would keep on the back burner. Obviously, if you're swinging it, they both favor the downside. So I don't necessarily dislike it for a swing, but then you would want to make sure that you keep your position size pretty much relatively low. All right. But that was a beautiful one here. I mean, that gap down was pretty intense today. So I would have wait to see what upcoming bounce you get. Maybe you get a retest of the support that you broke, and it'll retest as resistance, and then we'll see the decline in the coming days here with the overall market rolling over. All right. Another one was GM. I actually like GM quite a bit. Once I saw this Nimbus actually come out on GM, I was like, wow. But then it ended up disappointing me because I actually tweeted out the chart this morning before market open, and we were actually still holding above the support level on this descending Browning wedge. But then we ended up nosediving right inside of it following the news that they had with Blink charging, because they're going to have Blink charging stations at all of their dealers. So that ended up nosediving, I guess, at expense of GM. You know, Blink is going to be the one to be benefiting out of that deal. So that's why we saw this stock kind of nosedive here, break right into support. So I want to see it reclaim right above the gap level here. Once we're able to reclaim above 59.74, then this will likely get more of my attention. But for right now, we completed the gap fill and we broke below the gap fill. So that tells me we're going to see a little bit more downside here. So until we are able to reclaim the 6157, I'm going to stay clear of GM right now, especially with market conditions. It's not in the favor of the market trend. So I will keep it on the radar again, and we'll see what she does. The only other factor I didn't like is how far the expiration is. So that goes out to about March 18th, which if I'm not mistaken, that actually also covers earnings as well. So that could rather be an earnings bet rather than current market price action. All right. Other one was SC, and I know that SC ended up paying. And this one, I'll probably go down to the 5 minute or so here, because I know this was a rapid. SC was just a beautiful little quick rapid. If you actually listen to how I was actually playing this out, and I know that someone was asking about this one in particular. And the moment I saw the alert come on, obviously it didn't favor the market direction. That was one of the biggest key things if you noticed. It didn't favor market conditions, but also identifying where you wanted to end up getting in this trade because you had that nice little V-shaped recovery, filled the morning gap, and we had a little bit of a extra push. But when they ended up getting in on that rapid, it was pretty much already in a decline, retracing about 50% of the move as you see. So the one thing that I was actually looking at more so is in this entire V-shaped recovery, where was it that we ended up stalling out or we had more trouble trying to get over? And looking at the body and the wicks that where they aligned, this looks like the level that we ended up having trouble at. So if you see the body lines up right where my support level is, the wick lines up, and that's exactly where we ended up retracing. So that level, if you heard me say it on live, I was pretty much watching for an entry under 171. I believe I said a little bit higher, about 170, 160 or so. I mentioned on live, and this is pretty much where you wanted to end up getting an entry under that level. What's going on, Jesse? But that's what you wanted to get, and that's why we're pretty much on live is giving you guys an entry point, or telling you whether you should enter alert, whether you shouldn't, or below a certain point that you should enter. And that's really what our guidance is on live here as well, is trying to make sure that you get the best possible entry as well, right? And that's why once I saw this and I know that it didn't favor the market, pretty much market trend, that's why I ended up trying to look for the best entry as possible. And I would have likely set pretty much a low balling order here, right below that eye level that I mentioned, 170, 160, and I would have likely got filled right here down to the wick of the 170, 138. So that's what I would end up doing. And as you see, you pretty much would have took that popper right back up, likely got your quick 8% or so, and you had been out of it. All right. Daniel, what's going on? Bear, I mean, I have to be a bear until the market tells me otherwise. I mean, I have to be with the market. Actually, the funnier part was that once I got on live this morning, I saw Avery also change his name to something bear related. And with Avery, I never expect that because Avery's usually always a bull. I think I'm the only one that's actually accepted the fact of being a bear at times. Because obviously, I mean, the market is really telling you right now all the price action we've had as of recently, and this is exactly what I was anticipating. Obviously, I expected it to come sooner than this, the market rolling over. But I was always the one that would come in as a bear on live, and Avery was always bullish. So he caught me off guard this morning, changing his name, and I think he accepted fate that SPY is going to about 450, maybe even lower. But back to SE, as you see, hopefully you guys actually heard me on live. For those of you that were listening, if you got that entry below the 170, 160, then you ended up getting the perfect entry. If you got in right when the alert came out, then yes, you took this nosedive down. You would have needed to average down and then hopefully be able to cover it up on the bounce on the way back up. So it wasn't a clean rapid, I will say that. But this is usually sometimes what happens, especially when you're going against market trend. You do have to sometimes average down, right? And that's what I was actually trying to prevent on live if you heard me when I said to enter under a certain limit. All right. But enough with SE. The other one was Google that I was watching. This one, I know that we've had quite a bit of alerts go off with Google in the past weeks and so. This one actually wasn't too bad per se. If you actually see where they got in, obviously it would have hurt you quite a bit on the drop off, but you had a nice little pushback towards the north. The other thing was that they went quite a bit out of the money, and that's where I think the factor is that it may have hurt a lot of you because if you see where they ended up getting in and how far it ended up dropping, if you took that low of 27.11 from where they triggered, that was about a $13 drop that you would have endured, and that would have been pretty painful. Now, if you would have got at the money, obviously, or maybe about within the one standard deviation or so at the money, then you would have been fine because you would have got that ride right back up north, pretty much right around the 10 o'clock window, about 30 minutes or so after the market opened. So that would have been a beautiful one if you got within one standard deviation or at the money. But given the strike that they got, I was not too pleased with that. And the other factor is, again, if you remember what I mentioned about Under Armour, this looks to be like it's an earnings bet because they went out to February 18th. So something you definitely want to keep an eye on, right? So I definitely wouldn't have likely took this one. I didn't even look to take this order because, again, I'm pretty much going with the market trend. I'm not looking to counter the trend. When you see that Nasdaq futures were pretty much already down so heavily that early in the morning, and they went pretty steep and pretty far out of the money, which is about what, 120 something dollars here, almost about $120 out of the money, in which they're basically making an earnings bet. All right. Other one was Best Buy. This one was a head scratcher when I first saw it. I thought it was gonna be Bed Bath and Beyond, but Best Buy Rapids came out. Was not expecting that at all. But looking at what they got, this is another one that kind of played a little bit of an inverse from the SC one, is because they got in the puts, but it ended up going up once they got into the puts. So they got in at 97. They took a ride about almost a dollar or so up before it ended up coming back down and pretty much making more lows into the afternoon. So this one was a little bit of a more so of an average down position. I didn't necessarily look at this chart when it came out to alert exactly a price point to get in. So unfortunately, this one you would have had to use your own TA, pretty much use your own market trend as well to indicate that this was going to end up paying. It was just going to end up taking a little bit more time. So either you ended up getting in right when the alert came out. Hopefully you waited just a bit, maybe got in at the highs and then took the ride down to maybe exit around the 92 mark. But otherwise, you pretty much ended up getting in immediately and like hitting your stop loss just shortly after. All right. But the other thing was that they went pretty deep in the money. That was one thing that I also didn't like. Maybe probably why I didn't look at the alert as well. They went pretty deep in the money. 130 strike in the money is very deep. And they also gave themselves more time. Well, no, they gave themselves a same week expiration, 121. It's just the strike that they went for that threw me off, and that was not something that I really liked. Although it was in the market trend, and you did have an 86% TFC score. All right. Covering the last one real quick was Chewy. This one I didn't mind. This one I actually liked it. I know that Chewy was not doing well at all in the past few days. They went same week expiration. They did go in the money on this one as well, and that was pretty much like a theme today between these two. But I knew that this one was actually also bleeding. But given the fact of where their entry was, this was pretty much equivalent to Best Buy and SC as well on the alerts. Because you would have ended up getting in on this wick up, and you see this massive wick all the way down to about 42 before making a nice little recovery. Um, Hopefully, if you did get in on that alert, maybe you got filled on this wick. But I know this was a really fast wick to the downside, and that's would have been your caution. And the other thing was that I'm sure you would have also went at the money rather than so deep in the money because they went at the 60 strike. All right. But other than that, I think it's more so the game of following the market trend. That's one thing I will say, especially those of you looking this week, keeping a close eye on the alerts, is make sure that the alerts that you're following are more so short dated, they don't cover earnings, and then also that they're following the market trend. All right. So I think that's the biggest things that I will say right now. As you see it, I'm looking at all the alerts. They pretty much made you either average down or make a low balling order. That's literally the two things that you ended up having to do. So hopefully you get pretty much an eyesight of that, maybe a little bit, so that way you know what to do within the coming days here, following the market trend. All right. Someone did mention to look at Moderna. I'll probably look at two charts real quick. So if someone wants to drop one more, and then we'll probably call it a night. Looking at Moderna, actually Moderna's almost at my support. Wow, look at that. I actually had support here on Moderna right around this level of 184. 184.54 is where I have my support. So I would watch for it. It should end up finding some kind of ground here for at least a near term bounce. Maybe you get a move right back to about from 184 to about 195 or so in a short term bounce. But it is a weak support, so just keep that in mind. As you see, this pretty much was a major wedge. So we could dip all the way down towards even about 144. So if we end up losing the support that I have here at 184, then it's like going to be a long ride down, and I would be really cautious. But this is where I would dip my toes in to scale into a position. If you're trying to go long on Moderna, 184.54 will be that spot, and then I would look to see if we can get any kind of bounce out of that. Obviously, you're not looking to hold, no diamond hold per se. You want to get a quick profit and be out of that. But if you're looking asking me about long term position, I would not be long term on Moderna at all. All right, that was just my bigger picture. All right, I'll look at this last one real quick. Someone mentioned Starbucks. I know that DWAC hit 90 today, Daniel. I think that's more so the top. I mean, I know that it dropped about $3 from that high, just to give you insight on it, just because I know the price action from today. So, I mean, in order for it to actually get more movement to the upside, I think it needs to reclaim 88. If it can reclaim 88 on DWAC, then we'll likely make another push right back to 90, and we could potentially make new highs because buyers will likely step in once that gets back over 88, trying to take out that recent high. But until it's able to reclaim 88, I think you stay clear. I know that the premium is pretty much juiced, the IV is juiced, so stay clear of that. I mean, until it breaks that 88, because right now you're basically just doing a knife catch right now. So just be cautious with that, all right? Starbucks here. Actually, looks like Starbucks actually approaching my. What did I have? Oh no, this isn't actually an anchored VWAP that I have. So if you actually notice what I have here with Starbucks, I have an anchored VWAP that goes from the March low. And so you'll likely find some support right around 93, 93.60 is where you're going to find support. And also the other factor is that you're also going to be within a gap fill, more so or less, once that ends up reaching that anchor VWAP. So I would watch for that until that level. Now, obviously, you're trying to catch a knife because you see how steep that knife is. So I would wait for that 93. Don't try to jump in so early because then you definitely don't want to end up taking that elevator down from this 97 down to 93, and it's going to be a $4 drop. So you wait until 93. I would caution about waiting until the gap fills, in which you're likely going to get in around this 89. No, I would say 91. 91.30 will be that level where it completes the gap. So be cautious about that. If you're trying to get more so a long term position, you scale in at 93. If it completes the gap, then you add to the position at 91. And that'll be where it likely ends up finding some ground and getting a nice little reversal there. All right. So that's what I would caution about that. So 91 and 93, that's your range that you're looking to enter on Starbucks there. All right. But other than that, I think that will probably be it. Will there be a bounce before earnings? Right now, I don't think anyone even has an insight on whether there's going to be a bounce for earnings in terms of tech right now because this market correction seems like it may be pretty swift and pretty quick. So that may even lead up into a lot of earnings here, going into tech earnings specifically that are the week after next week. So I would just be cautious. I know that Netflix actually kicks it off on next week. So just be cautious of that. I don't expect too much of an earnings run up to be honest just yet, but it may be a little too early to tell until we find a key level on grounds here on SPY. Maybe whether that be that 465, 460, 450 on SPY. We need to find some kind of common ground, see where the tensions pretty much ease in the markets before we consider any type of run up into earnings. Otherwise, this may pretty much go through earnings, and that's going to be pretty painful. All right. So let's wait for that. I think it's a little early to really say whether we're going to get an earnings run up per se, but I would give it some more time, and then we'll be able to pretty much gauge that at a later time in the week. All right. But other than that, I think that will be it for tonight's session, guys. I'll see you guys on live tomorrow morning. Again, keep it light. Don't try to go in crazy. I know that the market volatility right now is not ideal, especially for those of you that, you're still learning TA. You're still pretty much trying to get a grasp of market price action, this is definitely not your typical market sentiment right now that you want to be taking, buying the dip per se, because that dip will only continue to get larger. All right. So just be cautious of that. Stay safe out there. But I'll see you guys on live tomorrow.